So joining us now is Y Combinator CEO Garry Tan. Y Combinator invested in Instacart more than 10 years ago, back in 2012. Garry, it's so great to have you on the show. Thanks for being here.
Thanks for having me back, Morgan.
So a strong debut for Instacart after the IPO price, the pricing process was raised, and finished the day at about $33.70 here. Want to get your thoughts on this debut of Instacart, especially since, yes, a strong first day as a public company, but still just a fraction of the valuation, the $39 billion valuation we saw for this company a mere 2 years ago.
I think the big thing that all founders out there are actually learning about sort of the hard way is to what degree interest rates are really affecting valuations and how they should think about their business. And the thing is, everyone's talking about 2023 as back to basics. That's true for venture. That's true for high growth startups. And the great thing about it is when you get back to basics the way Instacart has, you have a long and profitable future ahead of you. And I think that this is the new normal, but that's a good thing. These companies are so much more profitable. They're driving cash flow. And I think that that is good for investors, good for our capitalist economy.
Yeah. So what do public investors now who might be circling Instacart and the stock, what do they need to keep in mind in terms of future growth levers for this company and how they should be viewing it?
My favorite thing about Instacart was obviously that it was able to grow incredibly efficiently, especially during COVID. But the wild thing about it was that as people started to use it for the first time, they stuck with it and they keep using it over time. And so in the end, for especially consumer products of all sorts, I always look at that key retention number. It's something that at Y Combinator, we talk about with early stage founders all the time. If you don't have retention, then there's no long-term cash flow. There's no business. You can't value it at all. But if you have something that really changes behavior and people stick with for the long haul, that is a long-standing brand that will last and stand the test of time. And I think that that's what we've got with Instacart.
Yeah, which, of course, brings me to this story going back to 2012. The founder, Apurva Mehta, wouldn't take no for an answer. It's a great entrepreneur not quitting story, was really looking for Y Combinator to make an investment and went as far as using Instacart to deliver beer to you personally. Walk me through how all of this happened.
Absolutely. Y Combinator funds, at this point, we funded more than 4,000 companies. And the key innovation is funding people in batches, kind of like a university. But the tricky thing is we would back then especially look at things only during the application period. But Apurva would not take no for an answer. He emailed everyone. I was the one who replied and said, well, it'd be almost impossible to get you in now. And so a true founder takes that and says, so you're saying there's a chance. And so he tracked me down at the Mountain View Y Combinator office and actually he had already hired 2 people working off of Craigslist to do deliveries. And so a lot of people at the time were trying to do exactly this idea, but they were trying to do it with a pitch deck. They were out there raising on Sand Hill, trying to show, here's the idea, give me money and I'm going to go do it. But here was Apurva saying, you know what? I'm not going to wait for that. I can actually build it myself. I'm going to get the inventory info. I'm going to get the images. I'm going to get the payments. Both the driver and the consumer app were entirely built. And so that was my favorite thing about it. And I'm so glad he did it because he also made my career as an investor 11 years ago, right at the beginning of this 11-year overnight success.
It's such a good story. So I have to ask, we saw ARM last week, Instacart today. We're waiting on pricing for Klaviyo. Has the door kicked open now for more of these late-stage private companies to actually come public?
I absolutely think so. When companies have strong cash flows, when they have durable businesses, it's time to go public. And I'm really excited to see that level of health sort of ripple across all of startupdom. You know, it's time, guys. It's time, founders. Let's go.
Yeah. Real quickly, Stripe, you're invested. Class of 2009 for Y Combinator. Are we going to see that anytime soon?
I don't have any special information, but
Okay.
I do think that that's a really enduring company, too.